Assalamu alaikum. I'm Kanis Fatima Suzana. Today I will present an overview of the monetary policy announced by Bangladesh Bank. This presentation covers four major topics. Point. A summary of the policy, significant changes compared to the previous policy, tools used by the Bangladesh Bank, and finally the reform that I believe is necessary going forward. First, what is monetary policy? Monetary policy refers to the step taken by the central bank to control money supply, inflation, and overall economic stability. Bangladesh Bank updates its monetary policy twice a year based on the current economic conditions. The latest policy came at the time of high inflation, currency pressure, and weakening reserve. So this policy has taken more contradictory and reform-oriented approach. The summary of the latest monetary policy. The latest monetary policy focuses mainly on the controlling inflation, stabilizing the exchange rate, and restoring discipline in the banking sector. Bangladesh Bank reduces its direct control and moves toward a more market-based system for interest rate and the exchange rate. The policy also emphasizes strengthening governance, reducing non-performing loans, and improving liquidity management. Next, what are the significant changes compared to the previous policies? Compared to the earlier policy, this monetary policy brings several major changes. First, the interest rate system changed from an old structural toward a more transparent reference rate based approach. Second, the exchange rate is now more market driven instead of being tightly controlled. Third, credit growth. It has tightened to reduce inflation. And finally, liquidity management tools have been strengthened and reporting requirements for banks have become more strict. Now let's talk about tools used by Bangladesh Bank. To implement the policy, Bangladesh Bank used several tools. These include the policy rate such as repo rate and reverse repo, which influence borrowing cost, cash reserve ratio, and statutory liquidity ratio. Liquidity market. Open market operations are used to absorb or inject money. Bangladesh Bank also intervenes in the foreign exchange market and issues regulatory guidelines when it is necessary. Now, let's talk about from my understanding, there are several reforms that are still needed. First, banking governance must be improved, especially to reduce non-performing loans. Second, transparency in the foreign exchange market must be ensured. Third, data analysis and forecasting should be guided all policy decisions. Fourth, Bangladesh banks need to strengthen supervision so all banks follow the rules. Finally, coordination with fiscal policy is essential because monetary policy cannot solve all problems. That's all for my presentation.